Ever feel like earnings season is just a fire hose of headlines and noise? It's a barrage of individually selected numbers. Stocks are up, stocks are down, analysts are upgrading, then downgrading. At the end of the day, you can just end up feeling confused. Many investors just look at the headlines and miss the real story, and that's where mistakes are made. Analyst commentary from someone you trust is certainly useful, but I like to go straight to the source. I'm not talking about the company press release. Sure, that's useful, but it's still designed to tell you a specific story. I prefer to look for more pieces to the whole story by listening to the earnings conference call. It's where the management presents the information from the press release and they take questions from analysts on the line. In this video, I'm going to show you two crucial clues that I found in the boring earnings calls of two stocks that the market is currently underestimating. First up, I checked on my favorite business development company, or BDC. Private equity is a hated slice of the market right now, and BDCs are being lumped in. This is partially warranted because their NAVs, or total worth of all assets, aren't growing. This is happening because early prepayments are above average. Yes, their loan candidates were such good candidates that they want to pay their loans off early. Outstanding loans and investments are assets to BDCs. Originations or new loans to balance that out have been down across the board. Listening into its earnings call, you'll find that Hercules Capital is seeing that trend start to slow. Early prepayments is still above average, but is decelerating quarter over quarter. At the same time, Hercules has hit record year-to-date fundings, putting it on pace to surpass its full-year fundings record. It's still one of my favorite buys right now while the market is sleeping on this 10.5% yield. The second conference call I want to tell you about is a little different. Although I did listen to Kimberly-Clark's earnings call last week, its last-minute conference call on Monday morning was far more enlightening. The company announced that it was going to acquire Kenvue Inc., ticker KVUE, the maker of Band-Aid, Tylenol, Aveeno, and many more brands. Shares of Kimberly-Clark opened 12% lower than they closed on Friday, and I was not happy when I saw the news. That was until I listened to the conference call. Now I see the vision. The vision is to become the number 2 consumer health company to Procter & Gamble. They brought up Procter & Gamble multiple times on the conference call, talking about the board members' previous experience there. Also, this chart was a dead giveaway. But nowhere in the press release was this vision really mentioned. I walked away from the call cautiously optimistic and ready to hear more. While the market continues to sell off shares of Kimberly-Clark, I'm recommending we just hold our shares of both companies. So remember, when you're trying to figure out your next investing move, the press release is the story they want to tell you, and the conference call is the story they can't help but tell.